A big deal is in the works in the mobile phone business, and I mean big. We're talking about two telecom giants, Britain's Vodafone and America's Verizon. They're in talks over the future of their partnership. Now, you may have heard of it, Verizon Wireless, the most profitable U.S. mobile phone company. Now Vodafone may be getting out of it. Verizon is in talks to buy Vodafone's 45% stake in Verizon Wireless. The price tag, and this is incredible, $130 billion. Big money, big players.
Vodafone is a gargantuan mobile company in Europe. This company was put together back in 2000. The size of the merger then was 150 billion euros. It was a huge deal.
Now, investors seem to like the news. Shares of Verizon and Vodafone both jumping on the news. The deal is part of Vodafone's strategy, guided by its CEO.
So what we've got now is Vittorio Caleo. He came in 2007, and he's gone, you know what, I don't need this bit, I don't need this bit. He's been selling off these spurious joint ventures.
But isn't Verizon? Also, actually.
This is about control and trust. He's getting control. He's walking away from Verizon, and he may end up with this $60 billion in cash. And this is the critical point. He's got a load of young gun MDs. He's going big in Africa. Africa could be the focus for Vodafone.
Excuse me, MDs, folks, is London talk from managing director. It's not a doctor. What's the geography that he would look at with Vodafone?
Africa. He's going to hold on to a little bit of control in Italy, and he's going big in cable in Germany.
One of the most successful media investors, Mario Gabelli of Gamco, says this deal is long overdue.
How big is the ring you want? And how many flowers do I have to give you? Look, you've got Verizon Wireless. It's a wonderful business, and it's basically going to do about $40 billion of EBITDA in 2014.
More money than God.
Not really. It's just an earning on their investment, and it's not that great, but it's improving. And they've got about $16 billion of capex. 45% of that is owned by Vodafone for a long period of time. So the question is, how do we make love? And the way you do it is to find a way that gives them a return on their investment.
This Ben Bernanke helping out, because Ben Bernanke's got such artificially low interest rates that these guys are in a panic now. Rates are going up. Let's get this deal done.
No, I think they've been romancing each other for a long time. It goes back to Ivan Seigenberg, and the new CEO at Verizon says, hey, I'm starting with a fresh deck, let me do it. It's not, there's no synergies to Verizon. They own it, they operate it. So the question is, what do they do next, and what is Vodafone going to do next with the money? If we have a deal of whether it's $100 billion or $130 billion, what does it mean for Vodafone?
All right, stock's up today, so what does it mean longer term?
It would be accretive to earnings right out of the gate, and I think that's one of the reasons that you've seen Verizon's stock trade up almost every time this is mentioned, regardless of the price. Because, and I would say that actually is a tribute to Ben Bernanke, and that this is to some extent financial engineering, in that the market has gotten focused on the idea that at any price this is accretive to earnings, and therefore the stock should go up. The reality is, look, it's real simple. If you pay less than the stake is worth, then Verizon stock should go up. If Verizon pays more than the stake is worth, then Verizon stock should go down. But right now, the interest rates are so low that almost anything looks accretive.